first I want to talk about a little bit about what the just overall Axion is, right? So it's a cryptocurrency that you're taking the tokens and then you're staking them. Think about like a bank CD, but way better. So a bank CD is going to give you about a 0.2, sometimes a 2% interest rate over a very long term. The regular interest rate for Axion is 8% plus the dividends you get from our auctions. So here's how it works. You buy Axion, you stake Axion, and then what you do is you get shares. Now Axion shares are the most valuable part of Axion. The longer you stake, the more shares you get. Every single week as we do our auction, every single shareholder gets a percentage of the auction. 85 or 80% of it is distributed proportionally to stakers, to your shares. So this is what Axion is. You buy Axion, you get your shares. With those shares, you get dividends of Axion. And then most importantly, is you get dividends of liquid Bitcoin, right? And this is really where this Axion's a game changer. Instead of having just continually buying the token and then selling the token, what we're encouraging everybody to do, and really what the tokenomics suggest, is you're going to buy Axion, but instead of after you get all of these dividends, you're going to earn Bitcoin. So this is really what this token is all about. Buy Axion, earn Bitcoin. So this way you can continue to buy the token, stake it, and we have max share staking. That is it's a 15.2-year term. But really what it is the purchase of large amounts of shares that get you earning Bitcoin. What you're going to say is, hey, how are you able to continue to roll out 2 billion new tokens every single week and not have significant runaway inflation? So VCA, 1 billion Axion per auction. So you have 1 billion Axion every single auction, 2 auctions a week, right? So I like to talk about things in terms of weeks because it's a little easier to talk about the numbers. Times 2 per week. So at 2 billion Axion a week, remember, you're getting distributed Bitcoin, the value of the auction. 85% of that is going to stakers. It's distributed to everybody in the stake. It's split up this way. 10% of it is in wrapped Bitcoin, but that's just the Ethereum version of Bitcoin. So that's why we just say Bitcoin. 10% of that Bitcoin goes to the auction better. So as soon as someone bets on the auction, they receive liquid Bitcoin. 85% of that goes towards Bitcoin that gets distributed to the stakers. 5% of that goes to Axion to continue to produce the auctions, to continue to pay for minting coins, pay for the employees. So 5% of this 500,000 will go to Axion. 85% goes to Bitcoin to stakers. 10% goes to Bitcoin for the person that's auctioning. That 85% is split up based on your percent of shares. The higher your percentage, the more Bitcoin you're going to get. Is what happens if the value of Axion goes up. But if it goes up 40, 50x, then I now won't be able to sell my Axion. And so am I going to lose out by having staked? Here's how this works. But we're tapering it down to 500 million a week until we get to about this 0.4 level. Once we're at that 0.4 level, we're still at 2 million. So you're going to see a plateau in dividends as we transition between these two numbers. As we shoot up past this, and again, this could happen in a matter of a day or in a half a day. You know how crypto works. These things quadrupling over a day and moving are very simple. As long as these are selling out, we're going to maintain 500 million indefinitely. So now Bitcoin divs will appreciate with price. Just to summarize here, we are going to start at 2 billion a week. We're going to maintain that 2 billion a week for as long as that thing sells out. But with the benefit of having a layer 2 on top of our contract with our multi-sig security, we can adjust this number so that we continue to control our price in the market, right? Because if somebody comes on here and says, well, you've got 1 billion tokens, but you're never selling them all out, that's not going to be a positive impact on our price. So what we're able to do is slowly taper down from 2 billion to 500 million. And then at that $500 million level, we're going to let it run forever.
Week.
Yes. Tapering makes it so that we can make sure that we don't fall into kind of a negative cycle where it looks like our token is no longer viable, because that's just not true.